little keynote from Trace Mayer, the manager of Bitcoin Knowledge Podcast. The message here is the Meyer multiple, whatever that is. I'm dying to hear. So, Trace, is Trace here? Come on up here. Come on. Trace Mayer. You want to stand at the... Welcome.
Thank you. I didn't make up the Mayer multiple. It was actually Preston from the Investors Podcast. So the Mayer multiple is where we take the current price divided by the 200-day moving average. And what this does is it gives us a relative price. So we get, like currently the 200-day moving average on Bitcoin is $7,200. The current price is $6,500, so it's 0.9x. What we can do is then we can plot that relative price over time, and looking at standard deviations, we can find out when things are expensive and when things are cheap relative to what they are over time. Now, the reason this is important is because we don't have any way to perform economic calculation in our current economy. This is because we're using a fiat currency that is not defined as a world reserve settlement currency. Under 31 U.S.C. 5101 through 5118, it defines United States dollars as Federal Reserve notes, pennies, nickels, quarters, dimes, and their varying degrees of metal, copper, zinc, whatever. 1 ounce of fine silver is defined as $1, whereas $50 is defined as 1 ounce of gold. And last time I checked, like the periodic table, 50 ounces of silver didn't equal 1 ounce of gold. So we have an unintelligible pronouncement of what money is under federal law, but that doesn't make any sense based on actual chemical law and physics. So as a result, we have a very confused worldwide monetary system based on the atom that you use to then construct everything else from. Now, the problem with this is that in City versus Dover, which was a case in 1991, it squarely framed this issue of what a dollar is. And because it had to do with, there was a real estate deal and it had dollars defined in it, but then like dollars were made illegal in 1933, but then they were made legal again in 1974. Anyways, it squarely framed the issue, and the United States Supreme Court refused to hear the case. Probably because it's a political question. But what that does is you have a monetary system that lurches from one crisis to the other because it's fundamentally unsound and unintelligible until eventually it culminates and accumulates in either hyperinflation or massive deflationary depression from currency collapse, credit contraction, credit crises. And we saw just an initial shock with 2007, 2008. What we're looking at is the complete collapse of worldwide economic activity. We've got trillions and trillions of dollars in China. We got trillions and trillions of dollars of United States debt. We now have more debt today than we did in 2007. Interest rates are starting to go up. There's quantitative tightening. We're getting a contraction in terms of dollars. It's providing strength to it. And yet, in all of this chaos, where we have nationalized money, I mean, think about this. When you think about the apex predators, like who are they? It's the institution of the state, right? And why is the institution of the state able to be that apex predator? Well, because they took from the market the right to money from the individuals. And this happened over a period of time. You know, humanity for tens of thousands of years, we've either used the monetary metals or we've used sodium bicarbonate, we've used seashells for money, salt, cows, all of these things. But, you know, then we invented this crazy thing called, well, first the Medici invented double entry bookkeeping, and then we invented fractional reserve banking. Well, in 1696, that collapsed, the Bank of England did, And so they were like, man, how do we fix this problem? So they put Isaac Newton in as master of the mint, and he develops the gold standard, looking at this in a very scientific way. And of course, what's he want to do? He wants to do alchemy, where he can create the gold out of nothing, because that's the hack, right? And he's not able to do it, and it lays the foundation for a golden age of humanity. You know, and we had huge amounts of trade and all of this stuff, and then you had, I think it was President William McKinley. He wanted America First, where they would build a railroad from Spain to the eastern end of Russia, from North America to Buenos Aires, so that we would have massive amounts of worldwide trade on top of this gold standard. Unfortunately, he got assassinated. Then we got Woodrow Wilson, and we took a different tact in terms of humanity. And in the process of this, the right to money shifted from the individual to the institution of the state. And as Mises wrote, you know, sound money isn't about, it's not a barbarous relic, it's an essential check and balance in the political machinery. It belongs in the same class of constitutions or bills of right. It protects against despotic inroads, and it does this because it prevents the confiscation through inflation, which is a form of taxation without representation and without due process of law. And so that's the environment we found ourselves in. Bank Secrecy Act, tying identity to money, going after political opponents with the banking blockade and WikiLeaks and things like this, you know, and then we have massive amounts of failure in the system because it's fundamentally unsound and unintelligible. But what do? We confiscate wealth using the instrumentality of the unit of account to bail out certain actors at the expense of others. So we privatize the gains and socialize the losses. And this is the environment that we were in. And then this crazy guy, Satoshi Nakamoto, decides, you know what, I'm going to just like put out this math equation, which is really just an internet protocol, right, for transferring value over a communications channel. And that was the lead advanced group. That was the Delta Force of monetary sovereignty. Came down, took territory. And then what happened to this thing? You thought it would have died, right? Like Mount Gox, it got cleaved in half. And next thing you know, it's healed like Wolverine, and it's 20 times as big in terms of economic substance. And so what is the destiny of this? You know, I've coined the term the hodler of last resort, the 7 network effects. We have speculation, merchants, consumers, miners or security, developers, financialization, and then world reserve settlement currency status. Speculation, I mean, we all love that one, right? Like that's chasing Bitcoin from a nickel to $6,000, right? Or whatever altcoin is the flavor of the day. Then we get the merchants and consumers. We haven't even started on that. You know, Bitcoin's starting to build out the Lightning Network. We've seen it in the scaling debates and everything. And then, like, what about security? Well, look at the Bitcoin Gold blockchain. You know, it got a reorg attack that was like $21 million on an exchange. You don't have to worry about that with Bitcoin. Can't roll that blockchain back. Look at how much proof of work there is. I mean, this is so much proof of work that the apex predators don't know what to do with it, right? The institutions of the state. So what do they have to do? They just kind of got to let it happen because they can't stop it, which if you're going to be a blockchain or a token or whatever it is, and you want to be fit for purpose, like it's not about filing some registration statement. It's not about complying with some other person's laws. It's about harnessing the laws of economics and physics in a way that you don't have to care what they think or what they want to do. That's monetary sovereignty. And it takes an instrument like that in order to become a world reserve settlement currency. And, you know, as we talked about, these network effects begin to exponentially reinforce each other. Well, now, guess what we have? We have BACT and LedgerX coming out. LedgerX has already been operating for a year. They're a swap execution facility and a derivatives clearing organization. Under federal law, they have to keep $25 million to backstop the clearinghouse. This is where the big boys play, the trillion-dollar currency markets every day with interest rate swaps, and now we have fully collateralized Bitcoin derivatives, puts and calls that are being traded on LedgerX, and Bakkt will roll these types of things out also. I mean, think about it. Cumberland, which is run by Don Wilson, DRW, they're the largest trader of U.S. Treasury securities in the world. And they've been trading this Bitcoin thing since like 2013. So where are we in, we're coming up on the 10-year anniversary, and where are we at? We've got the sixth network effect taking root with financialization, with derivative clearing organizations. How fast can that happen? How fast can a fiat currency evaporate into nothing? I mean, we're in the information age now. This stuff can happen overnight, just boom, just like that. And so, also when we look at like the forks and everything, I actually had a friend of mine, one of the Bitcoin core developers, I was like, we need to lower the barrier to entry to create forks. So they made forkgen.tech. You just change some variables, hit generate, boom, you got all the source code for a fork. That adds grease to the flagpole, because you got Bitcoin at the top, and then you got everything else. And to overcome the marketing, to overcome all of this stuff, like, what is going to become the apex predator? What is it going to be the dollar? Is it going to be gold? Or is it going to be something else? And if it's going to be something else, then what's it going to be? Well, it sure looks like it could possibly be Bitcoin, which is a really interesting thought, because now individuals hold the keys to their own money. And Bitcoin, having taken that territory, that monetary territory, and it's drafting in its wake are all the altcoins. I mean, we got a massive aircraft carrier and like a whole fleet of like additional ships that are being built. And then this is going to re-architect the whole way we establish trust. Being able to have bandwidth futures markets, now that net neutrality is gone. And so how do we price all this stuff? Well, we can use the Mayer multiple. We can find out when things are cheap, when things are expensive. And as I had mentioned earlier, the hodler of last resort, that's the person or individual or institution that will hold the asset to zero, the true believer. And previously, when we had hard money, it was always, if you had a softer money, you got obliterated financially by the people with the hard money. Look at what happened to Africa. They used glass beads, right? And European colonialism figured out how to use the glass beads to make them. So they came in and they basically used all the glass beads to buy all the resources in Africa by inflating the money supply. Boom! Just took all the resources just like that, using the money. China and India, they were a little late to the game adopting gold over silver. They lost 78% of their wealth doing that. They still haven't recovered. Whoom. So there went and swiped a bunch more money, much more capital using money. And so looking at gold, gold is about 1.5% inflation rate on an annual basis. But we don't know exactly how many gold ounces there are. There's no blockchain for gold. And then we look at COMEX, and we got paper gold, and that's actually how I came into this space. I was a consultant with GATA, the Gold Antitrust Action Committee, and what they found is that central banks only have a half to a third of the physical gold they claim to have because they've leased it out or otherwise encumbered it. Even Alan Greenspan in 1999, he testified before Congress that central banks, plural, stand ready to lease gold should the price rise. So they carry gold in the vault and gold out on loan is the same line item. In effect, they're reporting cash and accounts receivable as the same thing. Why? To suppress interest rates. Why is that important? Because their ability to issue what we use as money is infinitely more valuable than the price of the portfolio asset. And when we're using that currency, that medium of exchange, they're able to inflate it and confiscate wealth insidiously, silently. And now there's this Bitcoin thing. You know exactly how many Satoshis there are. The battlefield of the world's resources are now exactly quantified and defined in software code and in math that's immutable and secured by huge amounts of processing power. So what happens with the hodlers of last resort? Well, they're just able to start selling volatility on these DCOs. You want to buy some Bitcoin, Wall Street? I sold some 50,000 call options. They expire in December, $78 a contract. You want a position in Bitcoin? You can pay 50% more than the current strike price with a certain amount of option volatility. They're not going to be able to establish a position in Bitcoin. They're not going to be able to get territory on this blockchain without richly paying for it in terms of price ratios to other assets. So what are we looking at? We're looking at a wealth transfer, the likes of which the world has never seen and probably will never see again. Most institutions out there, pension funds, everybody's stock that they think they have in their E-Trade account, it's not there. It's been lent out and rehypothecated. Look at the Dole Foods case. You know, tender offer, 36 million authorized shares, 48 million facially valid shares with broker-dealers. Nobody knows what they own or how much of it they own. Procter & Gamble case, they couldn't even count the votes for the board seat that got contested. $30 million Procter & Gamble spent challenging that. So the whole way that we're looking at corporate governance and who owns what institutions and what organizations, all of this, you know, what happens when there's crisis? Well, you got to do the rational thing. You got to panic first. Yeah, like, if there's one lifeboat for the entire Titanic, like, sorry, if you don't get in the lifeboat, you're not going to really survive. And the fun thing about Bitcoin is that there's plenty of Bitcoin for everyone. It's just a function of price. People got to pay for it. And as Mises talks about, when we have asymmetric knowledge and information and we're making economic calculations, well, those people who calculate correctly economically have profits, and those who calculate incorrectly have losses. And as we see with the Bitcoin network, it is just absolutely brutal at allocating gains and losses, theft of private keys, if you want to call it an ability to have theft. I mean, it's just brutal. It's just what it is. And so this is the new world that we're moving into, a world with the hardest money that the world has ever seen. And in 18 months, that rate of Bitcoin issuance is going to decrease by half again. Hodlers are going to become that much more economically substantive and powerful. And then 4 years later, it's going to happen again. And in this process, the wealth is going to continue to being transferred from the less safe, less liquid forms of money to the safest, most liquid forms of money until all the capital misallocation that has happened over centuries because of the institution of the state and its infringement on people's ability to perform voluntary economic calculation, until all that miscalculation and misallocation of assets are marked to market with losses. And so the question is who's going to bear the losses and who's going to get the profits? You know, so it's a very sobering thing to think about. And so with that, kind of open it up to questions, and Michael can...
I've got the first couple questions. Thank you, Trace. So usually the intro happens at the beginning, but I'll add to sort of the intro. You're a true pioneer in the space. I mean, I got in 2013. People call me OG. I don't think anybody's OG unless an old timer unless they were there prior to the first halving, which I missed by a few months. And you were recommending. Do we have another mic? Right here. Okay. You were publicly out there recommending Bitcoin as an investment when it was 5 cents?
Yeah, something like that. Yeah, like I was talking with Roger Ver because, you know, we were trying to avoid the Bitcoin Cash fork. And he was like, well, what about the $100 million the Chinese miners have? And I was like, Roger, like 100,000 Bitcoins isn't cool. Like 300 to 700,000 Bitcoins, that's cool. That's when you become a player. So like, you know, it's the strictest, hardest money the world's ever seen. And we had to take incredible risk. Like you were talking with Marco, you know, you have to take that business risk. We had no idea, you know, freedom of speech, but now we're attacking the money. We had no idea whether we'd all be rounded up or assassinated or whatever.
Yeah,
And look at Lynn Sassaman, you know, who's immortalized in the Bitcoin blockchain, died under suspicious circumstances, one of our cryptographers.
I mean, politics is a long history of like questionable deaths and proven assassinations. I mean, you mentioned Woodrow Wilson going in and starting, you know, the Federal Reserve and their, you know, kind of dark of the night Jekyll Island.
Income tax.
And income tax. McKinley's assassinated in my hometown of Buffalo, New York. I don't know if 100 years later there's a murder mystery to be written about that assassination, or if there's any kind of conspiracy tales about, you know, bankers doing this or anything. Because, you know, I mentioned yesterday that, you know, the average person has a very short memory. I mean, if you ask people where money comes from, they'll say, oh, the government prints it, right? They'll think that actually that they don't borrow it to then have the mint. And, you know, I mean, Andrew Jackson, who's actually a distant relative of mine, I mean, he spent his whole presidency trying to get rid of the banks. And you had the first bank in the United States went down, you had the second bank went down, and, you know, branding, they decided not to call it the third bank, and they called it the Federal Reserve, and everybody thinks, wow, this is such a great thing. And it's really kind of gotten us to where we are today. You know, the dropping the gold standard, you know, the craziness. Most people don't realize that gold was illegal to own for several decades. And, you know, now we're looking at this interesting conundrum of how far can the most powerful nations on earth with giant military powers, who all seem to be playing the same game, because if China or the EU decided, hey, we're going to only go gold standard and we're going to deflate the U.S. currency, it'd be very interesting. But it seems that right now they're like, oh, cool, we can print all the money we want too. And so if everybody does it, you know, mutual friend of ours, Flip, Andrew Filipowski, he's spoken here before, said, you know, if you can just print money at will because of the full faith in government with nothing to back it, why do we need an IRS? Why don't we just simply print money to go and pay for all social programs, print money to go and pay for everything, because it's free to print money and it doesn't matter because it's infinity backs the U.S. government. When does rational thinking come in when you're not talking Zimbabwe, but a superpower who's going to continue until stopped, print quadrillions of dollars?
Yeah, I mean, that's what we've seen. All the great tyrants in history have made holding gold illegal because it stands as a protector of property rights. Hitler, Stalin, Mao, Franklin Roosevelt, who had massive concentration camps that he threw innocent civilians in with and challenged in Korematsu, went to the Supreme Court on habeas corpus. But, you know, it's just economic law. Like, it's just economic law that's going to take its place. You know, and eventually people, through billions of decisions that everybody makes with human action, acting deliberately to bring about some ends, they, you know, the pendulum, that it swings. We've seen it all throughout history. The thing that we have now that we haven't had in thousands of years of history is we now have this hard money, the hardest money the world's ever seen, and the cost to secure it is basically nothing. And no amount of violence is going to solve a math problem. You can't invade Peru and haul all the gold back this time. You know, you kill people, you don't get the private keys in most cases.
This is true, but you can, obviously, if we take it to the extreme, say, okay, we're going to go and put Roger Ver and other people we know or think have a lot of Bitcoin, you know, into the cell next to Julian Assange.
Yeah, I mean, that could happen, but like, if Bitcoin really is censorship resistant, then what it'll be able to do is liberate economic censorship, right? And I alluded to it with the suppression of the interest rates through the gold price suppression scheme. But what that does is that is a form of economic censorship, and so, which causes misallocations of capital to begin happening. Well, even if they, somehow are able to take Roger's bitcoins or whatever, they're still going to
not take his bitcoins, take him.
Well, they could take him, and maybe he'll like give him the bitcoins, to not end up like Khashoggi or whatever. But even if they get the bitcoins, they will still misallocate the capital and burn through them, and those bitcoins will get redistributed to other holders over time.
Like the Silk Road coins that now is owned by Tim Draper.
Yeah, I mean, Tim bought them for like
$700, and people were like laughing. It's like, you overpaid. It's $500 now.
Yeah, exactly. And that's because government is not they are simply not equipped to perform economic calculation because they have no profit and loss system. So they have to make economic calculation and decisions through bureaucracy, which gives them a huge disadvantage due to asymmetric knowledge and information when it comes to this. So, I mean, what we're looking at a total paradigm change, and a lot of this has to do with asymmetric encryption changing the economics of violence, which is a fundamental tectonic plate level shift. And so when you change that in terms of technology, because the Stone Age didn't end because of a lack of stones, right? Like, you change that type of stuff, and everything on top of it begins to change. So the buildings, buildings start shaking and falling down because it's basically an earthquake. Tsunamis, like the oceans begin moving. The oceans are the fiat currency markets. The buildings are, corporations and stuff like this. Like, this is a fundamental technological change that has happened. And we're either it's changed the chessboard.
Well, Warren Buffett, no fan of Bitcoin. Obviously, rat poison squared and all that.
And he's not very good with the scoreboard either. Well, I mean, my returns are twice his in 7 years compared to his 50.
Absolutely.
So if Warren Buffett's so good, like, where are your points on the scoreboard, Warren?
That's not where I was going with that, but that is true. But one of his sayings is that wealth creation is the movement of money from the impatient to the patient. And I think that is exactly what the people who've been in Bitcoin from the beginning, who didn't panic sell when it went to 30 cents after $30, or who didn't, say, hey, it just went from like $1 to 10, I'm out. And obviously, we do know where all the Satoshis are, but we don't know who holds them.
Which is good.
Which is good. And we also don't know, even Satoshi's million.
Supposedly. I mean, I don't think Sergio was very correct in his analysis with that anyways. So I think probably an unsubstantiated
You were
rumor.
at the second CoinAgenda. It was at the absolute depths of the market. I think we were at $225 Bitcoin. That was the one where Steve Michaels and I merged our conferences. There was so little in the industry. I said, don't do yours in San Diego. I'm doing one in Vegas. Let's put them together. And I think it was the least attended one ever. I think it was about 80 people. But oh my God, CoinAgenda is always about whether we have 600 people or we have 60 people. I've never had 60, but it's always about having the great speakers. And I think that one actually had the greatest speakers of all. We had Nick Szabo, we had you. We had a panel, and I mentioned it yesterday, with you and
Nick.
Edmund Moy. And
Joseph.
And basically the guy he arrested. That was a very dramatic moment. And the only appearance ever at a crypto conference, albeit on the screen, of Craig Wright.
Yeah, that was quite a panel. It was Craig Wright, Nick Szabo, me, Ed Moy, and Von Perling.
And and obviously those are two of the people often accused of being part of Satoshi.
Right.
And Craig willingly, so...
Yeah, fake Toshi. You can't make this stuff up. I mean, the entertainment value of this industry is worth being involved in it.
The hunt for Satoshi, yes. But at any rate, so I'm going to wrap up before I ask questions here with... We're going to discuss this a little bit later this afternoon when Caitlin Long comes. Caitlin has been an amazing thought leader in a couple of areas, and just a force of nature, what she did in Wyoming. Her next target now is that now is sort of crowdsourced to go to the other 49 states and Puerto Rico. I'm trying to obviously be helpful in Puerto Rico to get you utility token acts there, and once you get the majority of the states, it's going to be hard for the SEC to say, oh, you're all wrong. Just like marijuana right now, even though it's illegal all over the place, it's not enforced because so many states say, we want it here.
Well, and that goes to this economics of violence. Like,
Yeah.
you know, if you're going to be burning through your resources to try and enforce this stuff, eventually, if there's really hard money and you can't just confiscate through inflation, you're going to run out of resources and aren't going to be able to, like, engage in this stuff. Because you won't have the money to do it. And how will you get the money to do it? So, I mean, we might be going into a future where the institution of the state has a much smaller role just because of the economics.
But they're going to go down kicking and screaming.
Well,
so,
sure,
yeah.
but so did the Catholic Church. And now the Catholic Church plays a much smaller role than it did 500 years ago, where, you know, you had inquisitions and burnings at the stake.
Yep.
I mean, treason, like, what's that? You know, looking 50, 100, 200 years in the future from now.
Well, let's look 5 years in the future now. We will clearly have some kind of economic meltdown. And I had this conversation with Vinny, and you know, I think you two are, you know, probably if not the two, at least two of the five, you know, leading thinkers and in terms of the dynamics of what causes Bitcoin price to go up and down and everything. And once in a while, you sort of diverge on opinion. And you know, he's now looking at having like some, you know, black swan event that gets us down to 3,000, whether it's another Mount Gox or something like that, and then it's going to be a long road to, like, once we get above 20,000, it's going to go parabolic. But he basically thinks that from here on in, the halvings will have less of an effect because the percentage is lower. On the other hand, I'm of the thought that I think the percentages will be lower, but will be higher amounts of dollars. And we only have, what, 20, 30 million people in the world, as far as we can tell, with any kind of wallet. That's what the internet was in 1994. Today it's 4 billion. So where do you sort of see, I'm sorry, I got distracted with my original point. I was sort of going off topic. I'll ask where you see the price of Bitcoin going in that area, but one thing that could sort of stop the natural evolution is this new battle that Caitlin's fighting after she gets done bringing banks to Wyoming to accept crypto. The third one she has is really calling out, and so is Andreas, the possibility of the ETFs basically letting the banks hypothecate Bitcoin and have derivatives on it and do the same thing they did to gold and silver. How does that get stopped?
Yeah, first, I highly respect Caitlin. I've been friends with her for about 5 years or more, actually. You know what? I would love for them to try and suppress the price of Bitcoin. I would just love it. Why? Because as a hodler of last resort, I'm a seller of volatility, right? Like, I sold these 50K strikes. Well, guess what I turn around and do? I sell 5K puts. So if they suppress the price of Bitcoin, all they do is enable people to buy Bitcoin at a lower price in the short term. But that misallocation of capital has to get marked to market in the medium and the long term. And so for hodlers of last resort, it's actually a gift for them to attempt to suppress the price. So, like, I have no problem with that. The longer that can happen, the better. Like, I funded Armory because I wanted custodian solutions, and I decided not to continue funding it because, one, we had created the software that, you know, people kind of needed, but we also had tons of software. We had HSMs, like all this stuff that institutions want for custodianship. All the code's written. We just never released it to the public. You know, and part of that was I didn't want to continue funding the startup, but the other part was I don't really want these institutions to have the ability to buy Bitcoin yet. And so all the better if they're going to, like, try and rehypothecate. Like, if you're not holding your own private keys, I mean, hodlers of last resort, that's what they do. They go take the Bitcoin on the blockchain.
You did then go and be the angel investor in Kraken.
Right, yeah, Kraken and BitPay, you know, and these have all done very well, and I'm actually up measured in Bitcoin on those investments, which is a hard thing to do. Like, you have to change that numeraire that you're measuring with. Like, so I actually measure both in dollars, gold, and Bitcoin, and so I need to have positive ROIs measured in all three of them. But yeah, so like ETFs, if they rehypothecate, like, that's great, like, because they're increasing the supply of paper Bitcoin, but not real Bitcoin. And I'll take the real Bitcoin, and you can have the paper Bitcoin.
So we are running late again, although we do have ability at lunch to make up for some things. So one question, and then we'll move on to the panel. We can talk with Trace all day.
Blue shirt.
And say your name and.
Hi, I'm Joe Baker, founder of RemedyCoin.com. We have a new way of using blockchain to solve conflicts by offering forgiveness with a blockchain. It's kind of a forgiveness-based money. My question is, will you give me about 2 minutes later to explain this? Because I think with the...
Do we have a question kind of about the
Yeah,
topic of what we were talking about?
Dennis O'Neill Capital Advisors. Can you give a little insight of why the U.S. is lagging so much with Bitcoin, blockchain policy, legislation, and obviously it is driving billions of dollars to countries like Malta, Singapore, Caymans, Bermuda, Liechtenstein, Estonia. It just seems shocking to me that we have the biggest, fastest, largest new markets in the world, and that the U.S. has really not given any guidance or policy in this area.
Yeah, well, one is our regulatory framework. So I was at the CFTC's Technical Advisory Committee meeting a couple weeks ago, and the question was asked, like, well, could something be both a security and a commodity? And it's like, we don't have any regulatory framework for that. And then we have the 50 different states with money transmission laws and all this stuff. So one, it's just our form of government, representative democracy, like things can be kind of slow there. But two, and common law, as opposed to civil law. But I would also say that, like, the U.S. is kind of in the middle of the pack. We're not on the forefront like an Isle of Man or a Malta, but we're not banning it like Ecuador. And the U.S. is the U.S. is an economic juggernaut. And just wait until you see the effects of all of these Trump tariffs on changing the cash flows and the supply chains globally. And capital is just going to be flying back to the United States. But also, like, look, we got backed coming down the pipeline in December. We have LedgerX already as a derivatives clearing organization. We're at the forefront in terms of, like, large institutional money being able to come into Bitcoin if it wants to. So we definitely have, like, a regulatory framework for growth here that can take advantage of it. And I mean, like, right now, if we had a fiat currency dollar collapse, you could use LedgerX to cross the chasm.
I guess the follow-up question would be is that the larger ICOs, STOs, or whatever you want to call them, when they're led by large institutions, they're untouched by the SEC for the most part because they're considered to be sophisticated money. The smaller ICOs or STOs are being investigated in a significant way. I mean, subpoenas are being issued by the hundreds.
Oh yeah, like at the CFTC meeting after it was over, talking over lunch and stuff, there's just another round of 480 subpoenas that have gone out, which, like, hey, you want to climb the greasy flagpole to the top? You want to be an apex predator? You don't have to worry about subpoenas, right? Like, Bitcoin doesn't have to worry about subpoenas. So, I mean, like, if you want, like, it's just part of the landscape. Like, you can be the little dinosaur, you can be the big dinosaur, like, but if you're going to be the apex predator, you've got to have the resiliency of, like, a tardigrade and Wolverine to heal, and, like, I mean, this Bitcoin is a gigantic economic monster, and it's just getting started. Like, it's only 10 years into this thing. I mean, where it's going to be in another 60, 100 years, it's going to be crazy. And we got side chains and additional layers like Lightning Network and stuff like that. And these are all network effects. So I mean, like, ICOs and STOs, like, no, the next round is all going to happen probably on top of Rootstock. The next ICO bubble will probably be on top of Bitcoin via Rootstock or something like that. So, yeah, I mean, maybe I'm too Bitcoin centric, but I just don't see anything challenging Bitcoin in that regard. And looking at it geopolitically or geostrategically, if the U.S. does want to harness Bitcoin and sound money as part of their geostrategy, well, we saw the user-activated soft fork, BIP 148 with Bitcoin Cash. Immediately after that happened, Russia, China, and Iran came out with a new gold trading platform, and then within a month, LedgerX got their approval as a DCO. And so it's like boom, 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 a whole bunch of moves on the chessboard, and now, China's kind of on the defensive. I mean, what's China gonna do? They're gonna attack the petrodollar? Like, good luck with that, because we have Bitcoin as a backup. So, I mean, this is a big game that's being played.
I mean, there's hundreds of crypto funds out of Shanghai that are actively investing in crypto, and allegedly it's illegal to do crypto in China.
Yeah, I mean-
next year we're gonna have to put you on one of the panels. 'Cause you've
Yeah,
got so
and from
much
what
to
I
say.
understand,
Oh, then great. Then we'll hear from you then. Thank you so much. Thank you to
Thank you,
Trace
guys.
Meyer. Thank you so much.
So
Very, very interesting.
I'll hand it back to you.